Hello, grads of FinLearn Academy and fellow traders. Let's analyze the broad market, which is Nifty and Bank Nifty, and what lies ahead in the next week. In the previous week, it's a continuation. What we had seen was that we had expected prices to find support around the gap and move to 18,600 levels, and we saw a sharp decline towards the gap, and what followed was a swing up. Now Nifty is trading around the all-time high, which is 18,600. Bank Nifty has already crossed this high and trading up roughly around 3 odd percent from around those highs. And so far, if you see the sequence over here, we have a sequence of higher lows and higher highs. This suggests that the move which started from the low is intact, and we should see the continuation of the up move. And above 18,600, we don't have any reference level on the upside. It's like trailing your stop loss on your long trades and expect market to move higher. So for a reference point, we can create a channel between these two lows, and we can extend the channel, and on the channel the projections are substantially higher, around 18,800 odd levels on Nifty. So let me drop a line at the all-time high. So this is how your setup will look like in the Nifty. The continuation of the move is intact, and once we see a break above the all-time high, it opens up a substantial uh, on the upside, move on the upside to test the upper end of the channel, which lies around 18,800 to 18,900 levels. So that's the upside. The all-time high is just 100 odd points from the current levels. So once that get crossed, we should see the test of this channel on the upside. And if you see, this is a confirmed upward moving channel in which Nifty has tested the upper end of the channel. Now, having seen the upside, many of you say markets are overbought. Yes, markets are overbought. A strong uptrend can continue in the overbought zone till we don't see a violation of any support levels. And just now, what we saw was a sequence of higher lows and higher highs. So the last low itself becomes our support for the momentum traders, or what we call swing traders. Till the support at 18,100 odd level is not breached, any decline or pullback will be a corrective decline in the ongoing uptrend. And as a trader at these levels, it always is handy to know where your 20-day moving average is, because 20-day is a short term momentum defining moving averages. Till prices are above that, we expect it to go up. Even if you see in this correction, which we covered in the last video, we said any pullback till the 20-day should hold and prices should go up. So till we don't break the 20, any corrections towards the 20 is a corrective decline and buying opportunity. So now again what we have is last swing low and the 20 DMA around 18,200 to 100 odd levels. So this is going to be your trend support on the downside to ride this upswing, which we have started from the 16,800 lows. And the first projection on the upside is at 18,600 odd levels, which is the all-time high. Above that, what we saw in the start of the video was the upward sloping channel where the projections are anywhere between 18,800 to 18,900. And to conclude on the broad indices, which is Nifty, the up move is intact with support level around the last swing low at 18,100. Having said that, now let's move to Bank Nifty. In Bank Nifty, if you see, Bank Nifty has already crossed the all-time high. So once it twice it failed to cross this and saw a substantial corrective decline. Now consistently Bank Nifty is maintaining above that level. And what we did for the Nifty, we'll do it for the Bank Nifty to find projections on the upside. Again, when markets are trending up, the first tool which we use is the trending channel. So I'm trying to connect most of the lows over here. So this is your channel, and the channel is quite steep over here. So the channel on the upside itself, till the channel low is not reached, plus the 20 DMA, the upward projections on the channels are somewhere around 44 odd thousand levels on the upside. So both the indices are now moving in an upward sloping channel with levels which can be clearly marked on the upside as the next target till we don't see a short-term decline or a break below the 20 DMA. Till 20 DMA is holding on both the indices, we expect that uptrend to continue in spite of prices being in an extremely overbought situation. A strong trend does continue to remain up even when prices are highly overbought. Only a break of this, which is 20 DMA, which tell us that some correction might now come in. So now the significance, see when you saw on Nifty, the 20 DMA was also the last low. If you see for Bank Nifty, the 20 DMA is also the around the last low plus the all-time breakout level, which was earlier a resistance, now being breached on roll reversal is a support. So there's a cluster of support between 42,300 to 42,000 levels on the Bank Nifty. So both the indices, the bias continues to remain positive in spite of it being overbought. They are trending up, and prices can remain in overbought and continue to upswing till they don't close below the 20-day moving average. So for all the swing momentum traders over there, the 20 DMA is your risk management level to ride this upswing, which we are seeing in both the indices and the broad market. So that's the weekly update from my side, friends. Thanks and have a nice weekend.